All right, well, let's get started with our earnings preview. We got a lot of numbers and charts to look at, but before we get into that, I want to go around the room and get everyone's thoughts on a new all-time high that we hit today, and also your kind of gut raw feelings about sentiment going into earnings. We'll start with you, Matt Money. Just raw thoughts as we get into earnings.
For sure. I think we've all been in the same boat for quite some time, just recognizing where we are in terms of price of sale, where we are in terms of net income, re-accelerating growth. And, it's going to be interesting to see how my article performs when it gets published, hopefully either tomorrow or maybe even Monday before earnings comes out. But it's not going to be well received by the retail community. I think a lot of the folks in the chat and many folks in Amit, unfortunately, it's going to seem like a hit on you, but hopefully, you take it with stride. A lot of people in the chat often are trying to ride a little bit of hopium as we go into earnings. And I think people need to recognize that the valuation is pretty stretched on this company. And as much as I love the company and I've been using the company over the past 7 or 8 years at my day job, valuations matter sometimes, right? And I think it's just at a point now where unless you truly get to a place where earnings growth is north of 30%, I think it's going to be pretty difficult to sustain the current valuation that we have. And keep in mind, I think a lot of people are expecting them to show up this quarter with 35, 40% sort of numbers in terms of top line revenue growth, but the company themselves guided for 27%. And so they're aiming for about $772 million, which I believe is where they'll probably end up. And I'm very curious to see how it performs. If that's the case, we show up at 27% and we slow down from last quarter, which was 30% print.
Okay, Amir, your raw thoughts going into earnings?
Yeah, I mean, the expectations baked into the current quote are quite high, about 80 times price to sales, 416 times price to earnings. Even if you would do something instead of a pricing approach, but do a valuation approach, it implies something like 40% growth for 10 years and a 35% margin. So, I mean, there's a lot of expectations in the quote, but I'm not sure that's enough to punish the stock price here. I think Palantir is in this tremendous momentum where even analysts are starting to come around. I mean, they are firing, demoting analysts that have been bearish on Palantir to start to appease their customers that they've been telling no, don't buy Palantir. It's a sell from $8 per share to 80. So, I mean, there's a lot of momentum in the stock. So I'm not even sure what can send the stock down at this point. But from as Matt mentioned, if you take a realistic approach, then yeah, it's probably there's not much that they can report to justify where it's currently trading. I mean, it would have to be something like 40% year over year, which I don't think will happen. So, I mean, there's a lot of good things operationally. I mean, all the risk in Palantir right now, it's in the stock quote. I mean, the operations are just phenomenal, keep improving. So most of the risk now is just in the stock quote.
All right, Andy, Arnie, your thoughts going into earnings?
It's always tough because we always need to distinguish what's the business, what's the stock. And I think it is really important to try to discriminate when we talk about these two components, because on the business side, I really struggle to find something that is not cool right now. It's literally the perfect kind of company that you want to invest in terms of business structure, like the resiliencies to shock. Actually, Palantir benefits from shocks, recurring revenues, very strong free cash flow margin, now GAAP positive, growing, while also expanding margins. So operationally speaking, I really struggle to find anything that is not perfect right now. Valuation-wise, that is another topic, but it's a topic that we have been discussing already for much time. And the reality is we keep getting humbled, even when we realize, okay, the price does incorporate very high expectation, and is not Like, you don't need to be a genius to really see that, because when you try to inverse what is implied in the valuation, you realize, okay, 30% CAGR in the revenues for 10 years, 40% free cash flow margin. Numbers like that are already very high in terms of expectations. Almost no company in the world was able to sustain such a growth rate at scale. Neither the big tech actually were able to keep a 30% growth CAGR. But Palantir is a kind on its own, and right now is facing not a tailwind, is literally facing a tornado that is boosting their back. So when you have this condition, I think the playbook with which you need to consider stuff changes a little bit, because we enter in a situation where the perception can change the reality. Sounds so weird said like that, but if Palantir is really able to shape the narrative in such a strong way that is not only the leader, because we know right now is the leader, but is also perceived as the leader in this very strong growth market of AI, then a lot of adoption could actually arrive as a further effect from that condition, actually making Palantir not only the leader, but the perceived leader, becoming therefore the absolute dominant company in the sector. And the dynamic that I thought of it is Tesla during COVID. The fact that it was perceived as the leader in the EV adoption, and in that moment people wanted that specific thing, made Tesla the company where everybody was converging at, creating like a real effect in the numbers. Long story short, I think what really matters at this point, much more than the valuation per se, which we already know that is expensive, is how well the management is able to communicate the narrative into we are the company that provides value while everybody's speaking.
Yeah, I mean, it's just similar to what Tesla did the other day. I mean, the numbers weren't anything fantastic at all, but the stock actually went up, even though some would argue that Tesla, while not as extreme as Palantir maybe, but many would argue that Tesla was quite expensive where it was trading going into earnings. They miss on everything by billions, and Elon just sets the narrative during the earnings call, and stock went up for 2 days straight after that. So you're right, it's all about the communication. And as we all know, and probably the chat and people who watch us, is that this quarter, it's not so much about what they report as results today. It's more about what can we gauge about what's waiting in the future, because that's always been Alex Karp's approach. I mean, go back years when they ask him about operations, he's like, well, ask me in 2 years. 2 years later, stock price is at 80. It's always about the future with management and with Palantir. So all about the narrative.
And
go ahead, Arnie.
No, like just to break it down, but something we have been already discussing for more than a month. Like, what could be the weak point of everything is the SARS argument, which I personally would not spend too much time on. But what could be the final effect of this? Like, accounting-wise, we know that will have an impact. The question is, will the narrative that the company will try to share be more strong than this? Oh, this is just a little rock on the shoes, but let's remove it.
Yeah, I would agree. I would agree with all three of what you guys said. I think obviously guidance is going to be very important. Street's probably looking for at least 30%. They guided for 27%. So really what they're going to come up with versus what they guide for 2025, I think that's going to determine the trajectory of the stock. And then obviously SARS, I think no one really knows exactly what's going to happen with that. So that'll also be something we have to see on Monday.